Hey, it's Mac with PriceActionTradingSystem.com, and it is Thursday. It is February 3rd. This will be our chart lesson for the day. And again, I thought I'd show you the daily chart here. You can see we finally bounced out here. We had this trend channel working up, and we finally got a close outside of it today. Um, but it looks like we're closing. We did push on through and trade lower, but we closed back above that midline, which is a good sign to say we're probably at least going to push up and maybe try to make a new high here. Um, Even if we're not going to continue higher, we'll probably try to make a new high on this move up. We'll see what happens. But that's the way it's looking at this point. It's still a little bit early to know exactly what prices are going to do, and we'll just have to sit tight. But that's what I'm seeing as of now. Where we closed here, since we took a good bit of this back, we had a nice late afternoon rally. We didn't quite take it all back, um, but we took some of the sell-off back here before it was over. So there's a look at it. Let's go to the 2000 tick, or yeah, the 2000 tick intraday. Okay, here's a look at the 2000 tick chart, and for the most part, we were in a range here. You can clearly see the midline, the support. We didn't really test the resistance was maybe this was the high of the day, and these were the lows of the overnight, or the lows of the early morning anyway. We went a little lower than that. But you can see the way I found this target down here was I just did a measured move, which is this blue line. One of our tools lets us do that. But if you don't have that tool, you could just draw a line from here to here, and then that gives you your measured move. So of course this tool is one of the that's our Pat's custom toolbar. So that's you won't find this on regular NT. So it's one of our special tools. But anyway, you get that target either the same way, but it's real nice when you just click on this and say, oops, show measured move. If you click that, you can see it went away, and click it again, show measured move, and that puts your line down here and shows you the distance, and it'll put it up here too in case you go higher. And you can see that's right where we went to. We went a little further. We actually pierced that a little bit before we bounced. So that would have given you a perfect target. There's another channel working down through here, but I don't really think you need it because let me just put it on there and show it to you real briefly. Comes right down through here like so. And you can see we got a little close outside there, move to a new low, and then we bounce. So it's there if you want to use it. I think you were better off to use this shorter term stuff. No, I'll just leave it on there. We'll give it some real light color here, just so it stick so you can see the difference. And there's probably another one here. I didn't even draw this one this morning because this really felt so much like a range. But you can see this one too. And I don't know if we actually got a close outside on it and a new low as well. But by that time it was pretty obvious. This one's actually probably more like that right there. And if you oops, shoot. It's probably more like that right there. And if you zoom in here, you can see we did get a close outside. It's not real convincing, but it's probably enough, and we did make a new low and rally out of there. So if you looked at it like that, that's fine. A lot of times people will say, well, why didn't you have this trend line or that trend line? And the reason is because I played it like a range here, and I used my shorter term stuff in here. That's the way I like to do it because it keeps you more in tune to what's going on at the current level versus on a bigger level. Because on a bigger level, we've still got, because of this big move down here into this range, we still have an overall bearish tint, but you can't ignore all this support. So there's longs in here too, and I don't know where that came from. Hmm, I have no idea. Oh well, we'll see it later. Maybe I might have grabbed it by accident and moved it. If we see it later, I'll add it back. So seemed like I had a long in here somewhere, but I sure don't see it. Just glancing at it. But anyway, I'm getting sidetracked here. Let's get back on track. I'm trying to keep these things to 15 or 20 minutes. I think it's a better chart lesson that way, and you get less. I mean, just when they drag out and they're 30 minutes long, people start to lose me by the end of it, and I just think it's too much, and it just, especially for new people, and you just kind of get overwhelmed. And but unfortunately, that's how much price action we were having and all the volatility that we were. I probably could have done 45-minute to an hour videos, but I just don't like to drag them out that much, so I'm not going to. But anyway, let's talk about the trade. 7 o'clock came right in here is where, and you can see we were clearly, there's still that downward bias, but this is clearly some sideways type stuff, and we're working on down here. We do get this channel working lower here, but the 7 o'clock came again right in here, and there's just no setup here. This looks a bit like, technically there is a reversal here. Prices made the new high, they're working down. They broke higher, turned down again, and then broke higher again. So technically that is a failure when prices went lower right here. But it just looks so congested. I don't think it's right. I just don't think it's worth risking. And you see it obviously worked, and it did trap traders, and it dropped on down. But I think that's too risky there. And of course we bounce up here, and then we're just going sideways. And the only trade I see out of this whole range, I don't think you want to go long in here. And you finally make a high, and then you get a lower high here with a nice signal bar. This was a possibility, but you don't have a lot of room left there. There's probably enough to scalp out, but here you've got the whole other half of the little congestion or range area, and you can see we'd been going from high to low to high to low to high, so the odds are we're going back to low, and we may keep going since we broke out the top and failed. So I like that one. This one was tempting, but it's just really dangerous to go short right down here at the lows. Even if you traded it as an engulfing bar, same thing. But when you see one break higher and turn and go right out the other side that strongly, that's a good sign. So again, and if you took that trade, I probably wouldn't beat you up over it, or I probably wouldn't slap your hand too hard, but it's a little risky, but I mean, it's just hard to ignore that big bearish bar. If it breaks lower there, it's probably going to push on down and make a new low. But it could snap back first, and that's the danger of it. So, I mean, we know the idea is to understand what prices normally do. And normally prices will break out and snap back even if they're going lower. They did that here. They dropped down, and of course they fail like they almost always do. The key is you don't know exactly how far they're going to go on a failure. We hadn't pushed through there yet and kind of cleared it out, so there could be a lot of buy stops down here. There could be a lot of sell stops. Obviously there were a lot of sell stops because it just rocketed down. So my guess is people were getting long here, and when it broke lower, they all had to exit, and then all these people that wanted to get in here say, okay, it looks like we're going lower, and they get in, not understanding that prices normally fail first. And that's why we don't like to enter on a breakout. It's always dangerous. And then it snaps back, and next thing you know, it's going the other way, and they ran everybody's stops only for it to come back down and go exactly where they thought it was going to do. That's what prices do to you. If you try to use common sense on this stuff, you will get chopped to pieces. Prices don't move with common sense, and that's why most smart people struggle with trading, because they're using their common sense, and your common sense normally is come in very handy for you over life. So you reinforce having common sense being good to you. But in trading, common sense is not good to you. Trust me. Prices don't follow common sense movements. They follow their special set of rules that we teach you, our price action rules. And if you know those and you follow them 70% or more of the time, their prices do exactly what we tell you they're going to do. It's not 100%, but it's enough to give you an edge, a big edge, and it's enough to make you profitable if you can stick to the rules and get all the mental bugs out of your head and all the other things that goes with trading. But the reason most people fail, trying to move on here, but the reason most people fail at this is because they have unrealistic expectations. If you've never heard me say that, what I mean by that is you can't buy a book and read it, or buy a manual or read it, or buy a bunch of books and read them, and buy a bunch of manuals and read them, and then practice for a few weeks or maybe even a couple of months and go out and make money at this. People contact me all the time. I lost my job, or I need to make some money on the side. Can I learn this and use it, make a little part-time job just to make me $100 or $200 a day or a week on the side? No, it doesn't work like that. This is a skill. This is a zero-sum game. For you to make $1, somebody else has to lose $1. That's why it's called a zero-sum game. It's really not a game, it's a business. It's a zero-sum business. So for you to make $1, somebody's got to lose $1. Well, the skilled traders don't lose very often. They've been doing this for 20 years or 15 years or 10 years, and they're very skilled. They understand price movements. They know what prices are doing here. They're not throwing darts at a board like people that read a book and practiced for a couple of weeks are doing. There's no way you can learn this that quick. It's like, assume you tried to learn the piano and you wanted to play professionally as a piano player and join some symphony. Do you really think, without knowing anything about music or knowing anything about playing, that you can buy a book and read it and practice for a couple of weeks and then go join a professional symphony? No way. It takes years of practice to hone that skill, and trading is just like that. It takes years. It may not take everybody years, but I don't know anybody that didn't take at least a couple of 3 years to do this. Most people don't make it because they have unrealistic expectations, and they come in here and they read some information, and they get some information. If they get our information, at least they got good information. But you can't learn it in a couple of weeks because you got to get the screen time, you got to study, and you got to practice and immerse yourself in it, and you got to become skilled at it. And it's not an easy skill. It'd be like you sitting in the stands at the World Series and suddenly the batter got hurt and they say, "Hey, Joe or Mary, come down here and take the next bat and try to win this game for us." You got in the batter's box, you probably wouldn't even see a pitch. They'd strike you out in a blink. But if you got to go to practice every day started practicing with them every day, and you did that for a couple of years, and you got in some practice games, you started watching, eventually you might start to get a hit, and then you get better at it, and eventually you could actually step up in the batter's box. But you're not going to come right out of the stands and do it. And you're not going to come right out of the stands and trade professionally, day trade, and do it. It's not possible. So if you don't learn anything else from me, learn that you got to have realistic expectations. All right, back to the trades. We dropped down here. We made the new low. We also formed a low spot here, which I marked, and you can see we came back later. I just mark it until we see what comes later, and eventually, and it did hold, and so that's where I left my line. For this channel coming down, we got a break, a new low, and we rocketed up through the EMA. We tried to go down once. We tried to go down twice. It bounced right off the EMA. So when this broke higher, that's a failure. We did get a close outside this yellow channel, but we still probably going to make a new high, and you got plenty of room there. I don't think I'd wait and go long here because you see it struggled. It did end up going high, but if you wanted to go long on the engulfing bar, I like that one here because of the trap. Technically, the trap triggers one tick above this bar, so that's where you want to enter. And because it was an engulfing bar, you have to keep your stop further back and then wait till this bar to close and then put your stop under it. You want to use the previous swing, which you can't use that one because it's higher than this one. So, and this one's way down here. So I'd probably take that bar right there and put my stop below it because that's technically, even though it didn't break lower, it's still a little correction there. And on a smaller chart, you'd see a swing low there. So that's probably where I'd go for that trade. And I may not even give it that much room, but that's what you have to do. You can't put it below this bar on an engulfing bar. And even if this one started here, it could come back and go a little further before it goes up again. So you can't really use this bar if you're entering engulfing. So I hope that's clear. I'm getting way off on some tangents here, but this is all important stuff. So some people want me to get on my soapbox more often. And I know a lot of good stuff comes out of that. None of that's planned. That's just stuff that comes to my head for some reason. It never fails. Something will come to me and I just get the urge to talk about it. And somebody will email me and said they thought I was talking. Usually it'll be more than one person, but it'll be a couple of 3 people, and they'll email me and say, "Man, I needed that. You were talking directly to me, and I heard every word of it, and I took it to heart, and it was helpful for me." So I don't know. I don't believe in coincidences, but It's just funny how this stuff will come to me, and I'll start talking about it with no plans or anything, because generally I plan to come in here and go through the trades and be done and get out of here. So, but anyway, nice reversal there. Quick, easy move. You might even, I doubt you'd have got a runner out of that. It's possible, depending on how you played it. Runs up, makes a new high, and then we come down first entry, and then we push down and second entry, and this closes below the EMA. So that's a failure if it breaks lower, and boom, there it goes. And you get another move. And you may or may not have got a runner on this one. I don't think a runner was survived if you played this conservatively. So drops on down. We're moving down. I just don't see any entries in here that I like, and then it bounces it. You actually get a little close outside the new low, but that's probably not convincing enough. So notice it makes a little correction and then drops on down and makes a new low, and then it rallies out of there. And this is a second entry right here. It's tempting. Notice the new low, and you go, the break below there's a first entry, and then it goes higher and it comes back down. So break below there's a second entry. Just too much stem there. If you had a good signal bar here, I'd say take that trade, but there's just not a good signal bar there. It does make a new low, and it bounces out of there, but you don't really get rejection, just kind of chopping along there, and then finally it breaks out. This is all considered a new low right here. That's the way I would play that. So you get a first entry, and then you get a second entry short that fails, and it reverses, and you know you got them trapped because when it broke higher, look how it shot straight up before it corrected again. So it's a failed second entry short. It's a new high first entry, pull back second entry long. It's right off that key entry point. There's probably going to run some stops, which it did. It runs on up. It actually gets a little momentum here when it comes back and bounces again. And you could have considered maybe entering here. I didn't mark it, but it's a possibility. Maybe that's where my other blue arrow was. I make it green, but I mean, it's a higher low, and it closes above the EMA, and you got plenty of room. So it's a possibility. And look at the momentum. It takes off again. And then it comes lower. You don't want to go short in here. Even though we got an overshoot right there, I'd wait. And it does lead to the break of the trend line, which is generally an overshoot of your channel does lead to a break pretty soon. And you make a new low here, and you try to go higher, and you turn down once, you turn down twice, and it fails. So there's you another failure. I like going long, and look at that. You can see them running. They trapped them right there, and look at it go. Nice move up. And so you want to take that trade. Again, these reversals are more advanced. If you're new to this, forget about them, because if you try to learn them together with the other stuff, you'll get confused. You'll slow your learning curve. A lot of this stuff builds on other things, and some of them you kind of learn organically as you get better at this and you start to build from the basics. So you want to learn reversals and traps organically. And what I mean by that is you want to just concentrate on the basics. And as you're working on them and start to get good at them, you'll start noticing these things. Obviously, pay attention to them when I show them, but don't try trading them. And definitely, please don't send me a message why every trap fails or every failure fails, because if you take a failure and it fails, it wasn't a failure. You just read it, you just got fooled. So you'll get it with time, trust me. But don't try to force them, and don't try to learn them along with the basics. Just wait. People don't listen to me, and then but I've done this long enough and I've gotten enough feedback that if you wait and learn them organically, you'll do much better at this. Stick to the basics. The idea is to make money, not take trades. So we take off here, and we just kind of go sideways, and we come back and we get a break here. There is a second entry long, but that's an inside bar. It actually has a matching bottom, so you could consider it, but I think there's too much stem there and you're below the EMA, so I don't like that trade. You do get a higher low here, but not a very good signal bar. It runs up. You might consider going short right there. It is a second entry. You do have a break and a new high on 2 legs up, and you're still a good bit away from the EMA. So I didn't mark that one, but it definitely should be green. So that's another possibility. But we run down here. and then you get another first entry, second entry, and you make a lower high here. Technically it's higher than this one, but it's still lower than that one. And you can see the resistance area holding again there, that original one. And notice how we've been going from high to low, from low to high, from high to low, from low to high. So I feel pretty confident we're going to come back to the lows. It took a minute to work on down, but it does. And there's a lower high here, but you don't want to go short right into that support. It's been holding too much right across there. It would have gone on anyway, but you don't know that. So you can't risk it. Then you get your close outside. You actually get a second entry short right here. This is another one I didn't mark because it's a little too congested. You would expect prices to try to make a new low here though, but I just think that's too congested and it's on the wrong side of the EMA. Just wait for a better trade than that. And then you get two legs down to a new low, and this one is tempting, but there's just a little too much stem on that upper side. That doesn't quite, if it does fall into 1/3 rule, I mean, it's pressing it. I just don't like it. There's a good chance we're going to snap back, but we could break up and make one more move down. But when it runs up, pushes through, pulls back, and gives you that higher low, I like that trade on a higher low. And boom, off it goes. And we actually come back and make a failure here. This one's not ideal because it technically didn't break till above that bar, so you would enter one tick above that bar, but your stop still goes down here. I always put the signal bar below, I'm sorry, the arrow above or below the signal bar, but on failures it could be a different bar, and on this one it is because it's where it breaks higher that it fails. So when it broke, so when this second entry short right here broke higher above a previous bar before moving a certain distance, then that's where you want to go. That's where the failure occurs. So it's right there. And just because you see it break higher doesn't mean it's a failure. You got to be looking at everything else. We know it's time for a reversal here because this green channel played out. And if you draw this, I didn't draw this one, but it's probably more like that. It could be more like this. I'll draw it like so. Yeah, that looks right. And you do get a close outside here, but it's still going to be a reversal. And there may be some flatter something here. It doesn't turn out that way, but you want to take that trade right there. Runs up to a new high, and then it turns down. You actually get a first entry and then the second entry, but it's just too far away from the EMA, a little bit congested. Works on down here. I don't see anything, and then we're just going sideways. And that one is very tempting right there, but you just can't go short into that because this is what happens. Snaps back like that. But guess what? There's a new swing high, and then you try to go higher. Once it breaks below, and it's like a breakout pullback, but it's also a failed second entry long. So if it breaks lower there's a good chance it's going to trap people and go lower. And it doesn't look like it was a super trap because, you know, it breaks lower and it tries to come back before it goes lower again. So it still, I liked it. It's not ideal, and that's why I made it green. But you got this channel that you got right there, and you confirmed it here, and that just further confirms it and gives you a failure. And so it's something to consider. It's also a breakout pullback. That signal bar wouldn't qualify as a breakout pullback, but because it's a failed second entry long, you could count it. So I hope that's clear. Drops on down. We rally again here. I don't see any short I'd want to take on that, but we do make a new low. It looks like we're going to rally on out of here. But you can see we make that double top right there, comes back, makes a triple top right there. And so even though there's a pullback and it looks a little bit like a reversal, you can't go long into that double top without enough room right there, because this is what happens to you. You run into resistance, it turns down, and then it turns up and goes back again and goes right where you thought it was going to go, but you've already been stopped out. So you can't take that trade for that reason. But notice the green channel, you get a break, still moves to a new high, and then we're headed lower. And there's a little bit of a lower high right here, what's the high on that? 45.08. I think this one's a tick higher. Yeah, see that one's a 45. So you might consider going short right there since it did break higher and turn down. If it breaks lower right there, you've got plenty of room back to the midline, and it may go all the way to the low. So I was a little leery of it because you can see how flat the EMA is right there. And we had a lot of price action right in here that was above it. And so, but that's still one you could consider on, at least on being aggressive. And then we bounce. I don't see anything to take in here. We still a chance we haven't made a new, there's still a chance we can make another move to make a new low or whatever. So, and we're really just going sideways here. It drops down. There's a higher low here, but you got to go long right into the EMA. I don't recommend that. And then there's a failed second entry short right here. But look, we've been turning down at the midline, so there's not enough proof that we're going to go to the high side. You could get trapped there, so I don't like that one. The key is, have we been going from high to low and high to low? If we just been going and finding resistance at the midline and going to the low, then like that, you got to be careful because you don't have proof you can get through there. There's strong resistance across there, and so this may not make it. This is going to be a 30-minute lesson. So anyway, you run up right here. That bar is too bullish. This is a lower bar, so it's not your signal bar. Then we're just chopping and stuck at the midline again. And finally, you make a new high, and you try to go higher once. And I just played this as a lower high is the way I played this one. So it actually does go higher and then turn down and go higher. So it's still a failed second entry long the way this plays out. But I'm really playing this off the resistance as a lower high and with plenty of room to get out. So I like that one. Drops on down, too congested, right into the low support. It does go lower. There's a lower high here, but no short there. You finally come down here and you get a break. And notice it's really kind of two legs back. But it's kind of sideways, but it does break lower and then it turns up and it fails out the upside. So they're probably going to trap people. If it turns down, you may want to ride that back. You're looking for prices to make a new low anyway, so this looks like a long trap to me. And this is really a double bottom, so you get a first entry and it goes higher and you get a second entry. It looks a little congested too, so I made it green, but you may take that trade. And we drop down to a new low, and then we're rallying out of there. There is a reversal right here, what you could look at as a reversal, but notice that it's right into those highs. So I'm not crazy about it. It does run higher. You get a close outside this green channel right here, and you try to go higher once, you try to go higher twice, and it fails. So if it breaks lower there, it's probably going to be a failed second entry long, and we're looking for prices to make a new low after a close outside here. So you may take that trade. It's in the gray, but it's just right at 2:30. I mean, the time is 2:30.32, so it's 32 seconds. So that's close enough you could take that trade if you wanted. And that's how I saw it today. And unfortunately, it's a 28-minute. But we talked about some good stuff today, so I think it was worth it. Hopefully, I kept your interest today, and you learned something. And that's going to wrap it up for the week. No chart lessons on Friday, so we'll be back Monday. I'm done for today. I'm going to wrap this thing up and call it a day. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.